In this video, I show you what it takes to make the best price action pattern work for you in your own trading. Hello, welcome back, and this is a video that I planned for a long time. It is one of my favorite patterns, and even more than that, it is a video about how to make any pattern really work for you, and I will provide you with a few tips, questions, and just a few inspirations of how you must approach your trading and your price analysis when it comes to improving your price action. And this is a pattern, and pretty much this is the pattern that when you look at the classic technical analysis books like Edwards and McGee and all of those guys, they said that this is the most profitable and the most accurate trading pattern, and many traders don't realize the potential of it. And although it is the head and shoulders pattern, whenever I talk to a new trader or an intermediate trader and tell them you can make a living potentially with the head and shoulders pattern, they just give me this look because they don't understand the beauty of it, and even more important, they don't understand what it takes to make a pattern work. So I will show you what it takes to make any price action pattern work and how you must approach it. So the head and shoulders in general, it's a very simple pattern. What you look for is basically a change in trend structure. So when you know about, for example, the Dow theory, which has been proven for decades and decades, the Dow theory says that a trend and a bullish trend is active as long as the price keeps making higher highs and higher lows, which it did here on the left-hand side, higher highs and higher lows. Until this point, something is changing here. We go from higher highs here to lower highs. And this is pretty much what the head and shoulders does. And later we will get a little bit more advanced, but this is pretty much what you're looking for. You're looking for a change in price structure. You look for when is the market going from higher highs to lower highs. And also there is way more to this than it seems at first, because in this example, what do you have? You have a triple top here, and after this triple top, you see you have a significantly lower high. Not just a lower high, a significantly lower high. So the distance between the highest point and the next high is very meaningful, and it can tell you a lot about price action, because what does it tell you? It tells you that previously the buyers were very easily able to push the price higher. Now they are not in control anymore. Now the sellers are coming in because the buyers are not even able to get the price close to the previous high. So the price was too high for the buyers to buy, and the price seems to be high enough for the sellers to start selling now. And also the buyers are taking profits probably. So this is a first very basic example, but you need to understand that there's way more to any price action pattern than most of the books will tell you. And it's about learning the granular points about price action patterns and understanding what is behind the candles, and really understand the interaction between buyers and sellers. So the distance between the head and the right shoulder can be a first very important piece to the puzzle. Here as well, the market was making higher highs and higher lows during this uptrend, and then again a significantly higher low, a significantly lower high. And what does it tell you? It tells you that the market was in an uptrend, the buyers were completely in control, but when the market reached this high point here, the 82 round number, the buyers were not in control anymore, and it was probably too high for the buyers to buy. The sellers came in, they pushed the price back into the previous low, so they create the neckline, and you can see the market is really sticking to the level. So this fact that the market is sticking to a level, not even able to come, not even 50% back to the previous high, that is a very important market tell. It's a very important piece to the puzzle. Here, for example, we have a different picture, and later we will see that there are so many nuances when it comes to price or head and shoulders. And I really urge you to jump over your shadow if you think that the head and shoulders is not worthy of your time. Really explore all the nuances, as we will see later, because it's just a pattern that is beautiful. It's very helpful, and you can see here the market shot up very strongly. 1, 2, 3 very strong candles, and then afterwards something changed in the markets. You see 3 very, very strong candles followed by a small bearish sequence, and then from here to here, the market was almost not able to make a higher high. You can see that, right? This is very important. How strong is the market pushing into new highs? If the market is not able to push into new highs easily, it tells you a lot about the dynamic between the buyers and the sellers that is playing in the background in those candles. And you can see afterwards, suddenly we have a very strong bearish candle. You haven't seen a strong bearish candle in this last trending leg. So this is a very important piece to the puzzle. Afterwards, you can see the price is not able to come close to the previous high. So it's probably here making a double top, which shows you that there's no continuation of the previous uptrend. So all this bullish strength that we have seen here is now fading. The market comes back, pushes into the previous low. It's not making a lower low yet, but it's certainly challenging the last lows. And in an uptrend, you should see higher highs and higher lows. Now you are seeing an equal high and same lows, so that's very important. And after the push into the previous low, the market is not able to pull away from the level at all. It's making a significantly lower high. So we go from higher highs here to barely higher highs to equal highs to lower highs. And that is a very important shift in market structure. And then you can see, how does the breakout occur? The breakout occurs with a super, super strong bearish candle breaking below the lows. And this is where the new downtrend is initiated. So you can see, if you pay attention to price action, to highs and lows, to trend structures, to price waves, that is really where you can get a lot of information. And there are many ways how you can approach it. You can either trade the breakout, or what other people do is they trade retests and retracements. So you put your Fibonacci from this point to this point, and then you see where does this line up. And you can see we put the Fibonacci from here to here. We have a perfect 61.8 retracement. This is the concept of deceleration that I've talked about in the past. Very strong candle, immediately fades into a neutral candle and then a bearish candle. And this is where people trade retests. There are many ways how you can trade retests, but this is just one of them, that you look for a retest into, or a retracement into a Fibonacci level. And just a few primers, and there are many, many more chart studies coming after this, but just to understand the complexity and the beauty of head and shoulders and how to make it work, those are just a few questions that you can ask yourself. Does the distance between the head and shoulders matter? So as we have seen, there's a high importance between or when you look at the distance. So for example, the right shoulder, when the right shoulder is very small and far away from the head, that tells you a lot about the change and shift in dynamics. And those are all the questions that you can ask yourself when you're studying the head and shoulders, to improve your skills and to filter out good from not so good head and shoulders patterns. Does the size of the head matter? We have seen it as well, which means that, is it important when the price is just barely making a new higher high? Of course, there's a difference. Does it make a difference if you have 3 or 4 shoulders? Maybe you have 2 right shoulders, maybe you have 2 left shoulders. Does it make a difference? Is it better to use the head and shoulders as a reversal or a continuation pattern? This is what we're going to examine later. Are retests working? What type of retests? We're going to take a look at that as well. Does patterns at support and resistance increase your profitability, so you don't trade every head and shoulders, but you wait for the price to get to a key price level and then you wait for head and shoulders to form? How do you optimize your stops? You use very wide stops. Where do you put your stops? Just above the neckline, maybe above the right shoulder. How do you set your targets? Does a MA breakout confluence improve your odds, which we're going to take a look at as well? Will Fibonacci retracements work? And those questions, those are the questions that you need to ask yourself and that you need to examine and study if you want to master a price action pattern. You cannot approach price action analysis like most of the people who just look for a template. They don't try to think. They just look, oh, this is a head and shoulders, let me get in. That is not how you approach technical analysis from a professional standpoint. You really need to study the nuances and you need to improve your odds step by step by step. And every little nuance that you are grasping, every little nuance that you are able to analyze and understand will help you improve your trading. So if you approach your trading from a very, very shallow surface level, so you're not really studying, you're just hunting for setups, you need to really change that. So here we have another head and shoulders after a long, long trend. You have a change in the high and low structure, whereas previously the price easily made higher highs and higher lows. You can see the price almost rose in one straight line. Now you see that here the market was struggling. It made high highs, and here it made significantly lower lows. And you can see also it's not even coming close to the previous high. We have a very nice support level that lines up. And when we go to the next slide, which is going to be the same pattern, you'll see that there is a retest pattern. So you can trade the breakout, you can trade the retest. There are many, many ways how you can approach a head and shoulders. There's not just one way to trade it, and you can, and I hope you really see the beauty of that. Here we have a head and shoulders that is once again different. In a downtrend, the market eventually just barely makes a lower low, and even more important, how does it make the lower low? With a strong, strong candle. You would expect after such a strong candle to see more bearishness, right? But it didn't happen. The market immediately paused. The market immediately reversed with a super strong bullish candle. This is the strongest bullish candle that we have seen in all the previous downtrend. And this is an important piece to the puzzle. It's not enough to just buy yet, but it's an important piece to the puzzle. And afterwards, you can see the market comes back into the resistance area and then eventually breaks out and starts a new uptrend after making higher lows, whereas previously it always made lower lows. And if you want to learn the head and shoulders pattern, and if you want to learn all patterns that we trade and also get access to our mental course, our trading as a business course, our supply and demand course, where you learn to think and trade like a bank trader, and all of our advanced patterns and systems, make sure to check the link in the description below. We put together all of our 8 trading courses, and you get 2 weekly emails with the market breakdown for only one price. This is a first and very, very unique opportunity to take your trading to the next level if you are serious. But let's continue with the next studies. And here we're adding now a moving average to the charts, and this is a 50 period moving average. And you can see how the moving average also helps us to determine a good trend change. So you're not only looking for any head and shoulders, but you're waiting for a head and shoulders to get triggered and also to have a break in the moving average. This will help you to filter out bad trades. That will help you filter out trades that are not ready yet when it doesn't happen with the break of the moving average. And you can use different moving averages. You can use different tools as well. You could use the trend rider, which we also offer on Tradeciety. Check the link for that in the description below. You can see the trend rider adds a lot of nice confluence. You have the green background color here that signals when the momentum is changing. You have the green histogram that confirms here the bullish momentum on the breakout. So there are many, many ways how you can improve your odds on trading a head and shoulders. You can use the head and shoulders as a trend continuation. So the market was here in an uptrend. The uptrend temporarily paused. The market made lower lows and lower highs, but eventually it turned around, started making significantly higher lows again, moved back into the previous high. So it built an inverse head and shoulder. And then on the breakout, you can see the uptrend was continued and the market continued to rise. So you cannot only trade a head and shoulders as a reversal pattern to find new trends, but you can also use it in existing trends to find trend continuation trades. You can see there are different types of variations of head and shoulders. A small left shoulder with a triple top here as your head. And then here you have a significantly higher low on the right shoulder. And here this is a retest pattern. This is the lower time frame, so this is the same pattern. This is the 12-hour. You can use the head and shoulder for a multi-time frame approach. So when you see that the head and shoulder has been triggered, you just go to the lower time frame and you wait for the retest here. You can see this is where the retest happened. We draw a Fibonacci from here to here. You see it's a perfect 50% retracement. And you can see there are lots of candlestick forming with rejection wicks. So you can even find a small head and shoulder within the big head and shoulder as a retest pattern. And there are really, really unlimited options how you can study a head and shoulders. And this is the point of this video. I hope I made you look at price action differently and at patterns, because there are many traders who could be profitable just trading one pattern. but they think it's too easy. It can't be that easy. It's not going to be easy, but it's going to be very, very simple. You focus on one pattern and you just try to master every little detail that there is about a certain pattern. And then over time, your trading will improve. You will start looking at charts differently because you understand all the different nuances. You're not all over the place, and you can really focus on one aspect of price action and chart analysis. And that is what it's all about. And again, make sure to check the link in the description below if you want to start to learn how to trade like a professional trader. You get access to all of our 8 courses at once, right away, instant access, including our Trading as a Business course. It's only one price. It's a very low price, so make sure to check that out in the description below. And if you like those types of videos with advanced price action, let me know in the comments, leave a thumbs up, and make sure to subscribe to my YouTube channel.